I think it's probably a lot of little things weighing on sentiment right now. And we actually conducted our quarterly U.S. equity investor survey at the end of June, wrapped it up last week. And the thing that we noticed was that if you kind of look across all the different questions we asked, optimism did appear to be fading, not only on the broader U.S. equity market outlook, but also on things like the economy. So if you look at economic optimism, we asked people, how do you think the economy is going to do over the next 6 to 12 months? We found that back in our March survey, 93% were optimistic, either bullish or very bullish, and that had dwindled down to about 72% in this last survey. So still a very positive tilt, but also a very meaningful move down. We also found at the same time that faith in reflation trades like small cap and value had eroded. So still two of the top areas people expected outperformance, but a big degradation versus the March survey. And then the last thing I would just tell you is we're headed into reporting season next week. And we actually asked people, what do you think is going to be happening in terms of margins? And do you think inflationary pressures are baked in? We found that there was a lot of concern that inflationary pressures are not properly baked into estimates. And we found that those expecting margin expansion dropped to 39% from the 70s back in the March survey. So I think those are, clearly, it's economic optimism that's starting to fade, positioning starting to be questioned, and earnings season making buy-siders a little bit nervous.
Yeah, and Lori, I don't know about you, but I'm old enough to remember, every July for the last 20 years. A little seasonality also is expected. We are on record highs, but I want to repeat that. We are on record highs for tech and the S&P 500. A little down move, a little pause that refreshes, a little correction, whatever you want to call it. These are not necessarily bad things.
Exactly. And, the other thing we noticed in the survey was that concerns about valuation actually ticked up versus the March survey. So, again, we're sort of in your camp. We've hit my 43.25 target on the S&P 500. We see things like rich valuations, a potential peak in S&P 500 EPS growth. And, you mentioned seasonality, Brian, but if you just go back to the historical playbook around recoveries coming out of recessions, whenever we get this early cycle peak in S&P 500 EPS growth, the rate of change, not the dollar level, stocks are usually down 6 months later and up 12 months later. Markets do have a hard time digesting deceleration on the earnings growth front, and we are right smack dab in the middle of that right now.
Yeah, panic selling last year, maybe panic buying to end last year and through this year. It sounds like what you're saying is, Lori, in a year, stocks are likely to be higher than they are now, but expect some pockets of weakness, maybe not just today.
Exactly. And look, I think that at the end of the day, investors, it's been just a ferocious ride. And I think a lot of investors recognize that we've, sort of exceeded the recovery that we had coming off the 2009 lows, in fact. And it's really hard. I go back to this S&P EPS data point. It's really hard to imagine EPS growth in the back half of this year coming in better than the 60% that's expected to come in now, even if it is quite strong. And so I think investors sort of understand what that playbook typically is. We also got the Fed minutes yesterday, and we had a big reset in tightening expectations that happened after that last meeting. And so I think investors got another reminder of that yesterday. And typically, I mentioned positioning, sort of people are digesting what to do there. You do typically see that when the Fed hikes rates, that these reflation trades come to an end, that you tend to see small cap outperformance versus large cap peak. Value tends to do very well in the run up to rate hikes, but then we tend to see growth take over. And we also tend to see cyclicals take a breather. Now, that's not all to say that these trades have to go away right now. There's still valuation room for them, but there is a little bit of an end in sight for some of these, and investors understand that.
Yeah, quickly, Lori, are you shocked at how low 10-year yields are moving right now?
I'm shocked. And, look, I will tell you, the investors in our survey were shocked. We asked them where you think yields are going to go. And most people are in the 2 to 3% camp. And that seems to be, sort of a far ways off at this moment in time. So I think that move, whatever is driving it, it's taken equity investors as a negative surprise.
Shepard Smith here. Thanks for watching CNBC on YouTube.